Hello and welcome to the latest edition of the Accountancy Services Direct Q&A podcast. My name's Enzo and I'm really pleased to be welcomed once again by our senior accountant, Andy Fairclough. How you doing, Andy?
Not too bad, Enzo. Got more questions?
Another question for you today, a little bit more of a detailed one.
Okay.
So I'm going to get straight to it and read it for you. I set up a limited company in January 2010, but the company is currently lying dormant until July 2010. However, during the period of January to March 2010, I did some freelance work and haven't yet billed the £8,000 charge to the client, as I was waiting for July to put it through the reactivated company. Now, however, I've recently been told that I could have invoiced the freelance work and paid it into my personal account and then declared the earnings and tax via self-assessment. The question is, should I invoice via my new company without the VAT or go via the personal or self-assessment route? Considering also, this person writes here that they haven't made any more earnings this year, what should they do?
Right, well, two things to think about really, and it goes around whether they've had any expenses to go against the invoicing, and also logistical problems. Because if we take it as though it's self-employed income, the £8,000 less their personal allowance would generate tax and national insurance to pay over to the revenue of around £490. But if they went limited company route, the tax would end up being around £480. So there's not too much difference there. The main issue is logistical reasons. I mean, from personal angle, I would probably keep it as self-employed, because otherwise you would need to have a PAYE scheme set up with the revenue in order to help you minimise the tax and bring it down to £480. Otherwise it would be significantly larger. Also, preparing limited company accounts for an £8,000 company turnover will probably not really be worth the cost. It would be far cheaper to have an accountant do a tax return, a simple tax return for self-employed income, or you could even do it yourself, which would be for free. So, on the face of it, I would say you keep it as self-employed income, do your tax return as normal, and include any legitimate business expenses against it to reduce the tax further, and also not incur any unnecessary accountancy fees for preparing limited company accounts, as they have to be correctly filed with the Revenue and Companies House, which would be a lot more cost for you to have to bear as opposed to doing it self-employed.
Fantastic, brilliant. So it's a couple of options there, including the free one, which is always great for our listeners. Just to pick up on the point you made there, Andy, if our listeners want to find out more about determining legitimate business expenses, please see our podcast episode number 2, where Andy discusses more about that. If you do need any further information, please contact us. Or also, if you have any accountancy questions that you want us to discuss, also contact us. And the details are via email, info@accountancyservicesdirect.co.uk, or you can call us on our free phone number, which is 0800 135 7463, or on our alternative number, which is 0208 144 4634. So until next time, see you soon, and thanks again for your time, Andy.
No problem at all.
Thanks, bye.
Bye.